Ladies and gentlemen, good day and welcome to Expleo Solutions Limited Q1 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Asha Gupta from E&Y Investor Relations. Thank you, and over to you, ma'am.
Thank you, Vedant. Good afternoon to all participants in the call. Welcome to Q1 FY23 earnings call of Expleo Solutions Limited. The results and investor presentations have been already mailed to you, and they are also available on the company's website. In case anyone does not have copy of press release and presentation, please do write to us and we will be happy to send it to you all. Representing to the management today, we have Mr. Balaji Vishwanathan, Managing Director and CEO, and Mr. Desikan Narayanan, Chief Financial Officer. Balaji will start the call with brief overview of the quarter gone by, which will be followed by Mr. Desikan, who will be getting into the detailed financials. After that, we will start the Q&A session. As usual, I would like to remind you that anything that is mentioned in this call which gives any outlook for the future or which can be construed as forward-looking statements must be viewed in conjunction with risks and uncertainties that we face. The risks and uncertainties are included but not limited to what we have mentioned in the prospectus filed with SEBI and subsequent annual report, which you can find it on our website. Having said that, I now hand over the call to Mr. Balaji. Over to you, sir.
Thanks, Asha. Thank you so much. Thanks to all the shareholders and investors and analysts who are there on the call today and for the interest with Expleo. We have had another good quarter and sequentially growing in double digits once again, and year on year at almost 45% growth. Primarily driven by the investments that we made a couple of years back on the digital transformation capabilities and software capabilities, and also the recently added data management capability as well. So our last quarter we actually had some one-time expenses which we didn't incur, because of which we had a higher EBITDA, and this year, this quarter it's slightly gone down, but it's still within the range that we had indicated earlier in terms of where we would be, and that's still above what our expectations are, and primarily because some of the expenses are, we are being a little watchful on where we are spending the money as well. We have had a reasonably good quarter, both in terms of new customers and also in terms of the people joining our company, and we have had and we feel that from where we are at this particular point of time, with the pipeline and the demand, we should continue to show good results, at least in the near term, at this particular point of time. The global volatility is something which we are watching out, but at this particular point of time, we don't see any big major risks because of the inflation and the recessionary pressures in the Western countries. And I would like to thank all our shareholders for overwhelmingly voting for the merger on in the shareholders meeting that was held on 2nd August, with 99.999% shareholders approving the merger scheme and 100% of our unsecured creditors approving the scheme as well. We're looking forward to continued upward trajectory in the numbers. Last time we were discussing about the unlisted companies and how we want to actually show some of those numbers. So I just wanted to give a quick indication on where we are with the unlisted companies. For the same quarter. For the listed companies, we did 127 crores of revenue, and for the unlisted companies, we did around 85.5 crores of revenue. And in the listed company, we did an EBITDA of 267 or 26.7 crores. And for the unlisted companies, we did an EBITDA of around 14.8 crores. The EBITDA percentage is 20.9% for the listed company and around a little over 17% for the unlisted company. Once again, in line with what we had indicated earlier as well. The growth trajectory is good in both the cases. In the listed company, we are looking at a year-on-year almost 44%-45% growth is what's been running so far. And in unlisted companies also, it's been upwards of 25% at this particular point of time. So, going forward as well, we'll probably try and include this as an annexure in our investor presentation till the merger is done. But we expect that the merger should get done before end of the year. So thank you so much. And Jessica, if you want to add anything more, please do. Otherwise, we can go for question and answers.
Just a little brief, thanks Balaji. Just a little brief about performance. Good afternoon to all. Another quarter continuing with the revenue increase by 12%. We do see a good performance, but with the same set of challenges across the industry is continuing. I will just brief about quarter-on-quarter and year-on performance. Quarter-on-quarter revenue for the first quarter improved by almost 12% compared to last quarter, ending at 127 crores. EBITDA percentage was 21%, almost flat compared to the last quarter. Drop in PAT percentage due to the forex loss during the quarter compared to a gain in the previous quarter. The cash position was at 148 crores. We did have an increase in the DSO compared to the last quarter, which is majorly due to one of the top clients who went for a software change, internal software change. So that really created a good amount of backlog from that customer. They are a top customer, but we got subsequently paid in the month of July. So that is the reason is the DSO went up. If I remove that, it will come to around the range of 73 days. So we are in line in the DSO also. On the year-on-year, the revenue grew up by 45% from 88 crores to 127 crores. EBITDA improved by almost 400 basis points, ending at 21% compared to 17% previous year. Basically, higher EBITDA has been contributed by the revenue increase. Our earnings per share also increased by around 34%, ending at 16.7%. Just update about the NCLT thing. We have done this shareholders thing is done. Now your approval has been received. Now we are submitting all the data to the NCLT, and they will be doing a couple of things like checking with the other agency like ROC and they will get no due, and they will be asking for us. From now it will be more of procedural thing which will be happening, but that will take its own time. The current expected timeline where we will be finishing it is around November end or December beginning. That's the timeline we are looking at. And once again, thank you everyone for voting in favor of. We can open up the floor for question and answer session.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Shrishti Jain from Monarch Network Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. Sir, could you please elaborate on the key driving factors behind this 12.2 sequential growth? What contribution did we have from Lucid Tech? And do you think this start sets up for a similar growth the growth we saw in FY22?
So the primary drivers for the growth is one is like what we mentioned, the growth in the digital space. But this quarter we also saw a significant increase in our traditional testing requirements as well. People who have started off their projects in the new calendar year and projects getting into the stage where we have to do some traditional testing elements as well. And apart from that, the data management practice or the Lucid practice which we added also contributed to the growth. The revenue from Lucid for this quarter is in the range of around around 9 or 8 crores or so. So that also contributed to the growth as well. And in terms of what the trajectory is going to be, we, like what I mentioned, at least for this year, this data management as a practice is a new practice. So obviously it will show that additional growth element. But going forward, our objective is to try and bring in the benefits of the merger, so the non-BFSI segment and the technology segment, and along with that, this data management capability as well. So our expectation is that we would continue to grow in the 25 to 30% range, at least for the next couple of years.
Sure, sir. Sir, and a significant, portion of a growth story is the intent from the parent to outsource. So what was the parent's contribution in FY22, and how do we see that growing in the next 2 to 3 years?
So as far as the listed entity, contribution from the group, the percentage contribution still remains in the same range of around 20-odd%. But however, just like how the other markets are growing at, year on year 40% plus and, quarter on quarter 12% plus, this particular segment also is growing at the same rate so that it can be actually at that 20% range. But as far as the other unlisted companies are concerned, a significant portion of their revenue, or particularly the Pune revenue, comes from the group. That's been growing in that same range of almost 7 to 8% quarter on quarter.
Sure, so that's very helpful. I'll join back in the queue.
Thanks.
Thank you. The next question is from the line of Manik Taneja from JM Financial. Please go ahead.
Thank you for the opportunity. Just wanted to get some details around the profitability of the unlisted arm, and also wanted to get your thoughts around the next 2 to 3 years, wherein there have been some comments around looking to ramp up India delivery to about 10,000 people. What are the numbers currently, including both the listed and unlisted entity, and how do you see that ramp up over the next few years? Thank you.
Sorry, I didn't get the first part of the question. Your question was on the profitability of the...
So you called out the EBITDA profitability for the unlisted business. If you could also help us understand how that business would have done on a sequential basis, and also call out the PAT numbers for the unlisted business.
Okay. Basically, do you want to take that?
Yeah, with respect to the unlisted entity for the quarter, 85 crores is the revenue, and the PAT is 9.1 crore, which is around 10.7%. Sequentially, if I look at both the company put together for the last couple of years, they were in the range of almost 17 to 20%, the EBITDA percentage. So that's the trend for the combined entity of both Pune and Bangalore.
Sure. So I was actually not looking for the EBITDA margin for the unlisted arms. I was actually looking for how the unlisted business would have done on a sequential basis. Just like we've grown almost like 12% for the listed business, how would the unlisted business have done on a sequential basis?
Yeah, so I'll probably try and take that. So on a sequential basis, the unlisted company grew at around 6% quarter on quarter. And the EBITDA percentages, this can have already covered. And from a PAT perspective, the PAT is approximately, give me one moment.
I think you called out that number to be 91 million.
Correct. That's the combined thing.
Perfect.
Sure. Thank you for that. And also, if you could share some thoughts around the ramp up for India delivery, because there have been some reports where you guys have suggested potential scale up to about 10,000 people in India.
The unlisted, between the listed companies and unlisted companies, we added close to around 220 odd people in this quarter. And next quarter, along with some of these campus hires and others, we expect that the number to go up. And this year, we are still expecting that we should be able to add anywhere between 1,000 to 1,200 odd people during the course of this year. And by 2025, both organic and inorganic put together, we are quite confident that we should be able to get to 10,000 people. So as of March 31st, we had around 4,300. As of June, we have a little over 4,500, and we should, close the financial year at 5,000 plus is what our expectation is.
Sure. Thank you. All the best for the future.
Thank you. The next question is from the line of Rohan from Multi-Act. Please go ahead.
Yeah.
Line for current participant has got disconnected. We'll move on to the next question from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Yeah, hi. Thanks for the opportunity and heartiest congratulations on superb numbers, Balaji and Jessica. Just the first question, I missed the guidance for the revenue growth for this year. If you can just repeat that, Balaji, please.
Rajesh, we don't have a guidance per se, but our expectation is that last year, that is as of March 31st, all the three entities put together, we did around 750 crores. And this year, we think that we would probably be close to around 850 crores.
850 crores. Okay.
Yeah.
So sequentially, do you expect this revenue growth to slow down a bit, is it?
So the listed company, primarily because of the exposure to other markets and also because of the addition of the data management capability, is growing sequentially at close to 12% plus. But the unlisted companies, the organic growth has been in the range of 5 to 6%, and we expect that both put together we would be in the range of around 20-odd%.
20-odd%. Okay. And then can you share, Balaji, what was the revenue growth for the parent company in this number, like sequentially?
Yeah, parent company, the expectation is that, so we don't have because this is actually a vacation time in France, so we don't have the finalized number. But in line with what Rajesh had mentioned in the previous this one and also the guidance that they had published, in the guidance with, we should be in that 1.205 to 1.21 billion euros is what our expectation was to close the calendar year. Hi, Ralph. Thanks for that.
Hi, everyone. What I can certainly, Ralph Gillison speaking, what I can certainly confirm is that we at a group level here see growth at least 20% for this financial year. And I think this is even in line with the figures that were even communicated by Rajesh on previous calls, but this is what we can see. And this is even what we even see with the legal entity here.
Sorry to interrupt you, Ralph. The audio is not clear from your line, sir.
Yeah, I'll just relay what.
Can you hear me? Can you hear me? Hello?
Yes, now I can hear you, sir. Yeah.
Okay, so again, I just want to confirm that we even see a healthy growth above 20% for the current fiscal year at a group level. And this is even going across all the different market segments that we have involved.
That's very helpful. So, question, Balaji, given what we are hearing about Europe either being in recession or going into recession, and obviously banking industry getting impacted, where is this growth coming from for us? I mean, it seems like parent is doing very well, and so are we, especially on the BFSI side. So, if you can just share your thoughts on that, this sort of counter-trend growth that we are seeing.
We are still seeing the growth from our traditional client base only, Rajesh. I'm not sure. As of now, at least, we haven't seen a big slowdown because most of the digital spends or people who are trying to do the transformation, they haven't really slowed down as yet. But we are keeping a close watch. As of now, we haven't seen any reduction or reduced spending or stopping of any projects at this particular point of time. It's still coming from the traditional segments only. And, like what I mentioned, the focus has been primarily on the software development, data and, DevOps and automation. And that's where we are seeing the growth as well.
Wonderful. Thank you. That's all I had for now.
Thank you. The next question is from the line of Udit Bukaria from Catamaran. Please go ahead.
Hello. Thank you for giving me an opportunity to ask the question. Sir, if you can just highlight, like I saw that the North American revenues have grown substantially quarter on quarter. So if you can just tell which was the client win which helped you and what is the kind of project that you are doing?
Yeah, so the North America growth is primarily driven by our newly acquired data management capability, which came from the Lucid Tech, because all their clients are actually in the US. So that's close to around $1 million is what the revenue is called added, and that's the reason why you are seeing North America for the first time in double digits.
Understood. So it's primarily driven through inorganic. Is that
That's right. That's right.
Okay. And sir, can you just repeat, like you mentioned, what's the FY23 total consolidated revenue target?
So like what I mentioned, we don't have a target or a forward-looking statement, but we expect that we should be in the range of around 840 to 850 crores.
Okay. Thanks a lot.
Thank you. The next question is from the line of Rohan Advant from Multi-Act. Please go ahead.
Yeah, thanks for the opportunity. Sir, in your press release, you said that the margins are lower than the last quarter, but is above our expected range of 18% due to timing of some of the expenses. So can you elaborate on that? I mean, are margins higher this quarter because of timing or they are lower because of timing of expenses? And what is this timing of expenses pertaining to?
So there are two parts to this. Last quarter, our EBITDA was around 21.9%, primarily because some of the expenses that we were to incur got pushed out. One is, of course, some of the marketing spend. The other one was on the merger-related expenses. And this quarter also, we didn't spend some of those, and we expect that some kind of a marketing spend will actually hit us because we are doing some global campaigns. You might have seen us more active in LinkedIn and Facebook and others. So there are some spends, but it's not a significant number. It will probably be around a couple of crores at best. That's the reason why. And we are being prudent on what we are spending on now, given the current inflationary trends. So even at a global level as a group, we are trying to relook at what we are spending on as well. So that's the reason why the margins are slightly higher. But the selling expenses are lower than what we are expecting right now. As we start spending more for increasing the pipeline, it will go back to that range that I talked about.
Got it. Sir, and secondly, on the unlisted subs, we've done 85 crores this quarter, Q1 FY23. FY22, we were at roughly 350 crores. So if you just look at a quarterly run rate for FY22, that is upwards of 85 crores. So this looks like, some kind of a lower number. So it was lumpy in the last year that when we had those big contracts in unlisted subs, the revenues were very high and not so in Q4. So we are calling out the 6% growth sequentially. But that is looking low if you look at an annualized number versus last year.
Basically, do you want to take that?
Yeah, actually, okay. One aspect of it is that last year, if you see the growth compared to the previous year and last year, we had a substantial growth because of one of the projects on the plastic which we got. It's a huge contract what we got, and also we had some expenses because of that. We invested in the capability. Now that project has gone into a BAU mode, and also we are getting in the same capability, but it's all smaller contract which has come in. So we will not definitely having the same level of growth which we had in the previous 2 years to this year. So that is kind of slowing down. So the increase will not be to the extent, but it will be in the range of double digits is the current view of the unlisted companies.
And that double digit is including the contract in the base, right? Of like our base was 346 crores, I think, of unlisted subs. Yeah.
That's right.
Yeah. And sir, lastly, can you just elaborate on what exactly do we do in data management, which is the new vertical? If you can elaborate on that. Thank you.
It's primarily what we do in the data management space is what we call it as data governance, data cleansing, or data quality verification, and some amount of augmented analytics. We don't do business analytics. We don't do customer insights, but primarily around how the data is stored, how effective the data is, and helping our customers in governing their data, because there are leading global platforms on this space, and we are partners with them to do this work.
Sir, and in that case, Lucid's capabilities, can it be extended to our client base and there is a cross-sell opportunity that exists for us?
Yes. Yeah. Absolutely, yes. And even we have already started that, and we already had one customer from our existing customer base who have been cross-sold with a data management capability, and that's the primary leverage as well. So it's not going to be standalone. That's why it's been integrated right from day one.
Thank you, sir. Good to know, and all the best.
Thank you.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah, good afternoon, sir. My first question is on the listed entity. So, if we remove the Lucid portion, the quarter-on-quarter growth seems low single digit, which I think will be lower than our expectation. Is my understanding correct? And same for the customer addition. So this quarter we only added like 4 net customers, 100, 204. Last 4-5 quarters we were adding like 10 customers. So if you can talk about these 2 points on listed.
Basically, you want to talk about this?
Yeah, with respect to the increase from the last quarter to current quarter, of course, Lucid had made an impact on it. If I look at it out of the 12%, this will be in the range of 6 to 7%. 6 to 7% will be the Lucid contribution, and balance will be the other than Lucid increase. Even though it generally starts lower and we tend to grow in the subsequent quarters is the way our trend has been. On the other aspect of it is, what was the second question you asked?
Last question was on the number of customers. The reason why the number of customers is 4 is primarily because as of now, the Lucid customers are considered as just one, because we are still novating the customer contracts. So not all the customers of Lucid are considered as new customers because they were existing in Lucid.
Yeah.
So it's not that 4 customers is actually from the organic business growth, not because of the inorganic number.
Yeah, but even on organic side, the last 4-5 customers per every quarter, which so 4 seems lower. Yeah, let's remove Lucid. So that was my question.
So it's a cycle. It's not that every quarter we will be able to add 10, 12 customers. At the end of the day, we need to consolidate and make sure that we are growing with the customers as well, because it's always a cycle. Most of the new engagements start either in the first quarter or in the last quarter, because that's when most of the customer engagements or the customers start new engagements within their profile as well. So that's why you don't see a lot of new customers. Our target is to add anywhere between 12 to 15 new customers in a year, and we are well in target for that.
And this number 12 to 15 customers per year addition is enough for that target you said we want to grow over the next couple of years at 25-30% CAGR.
Absolutely, yeah, because it's a question of not just adding customers, also growing with them as well. So.
Sure. Sir, second question is on the unlisted entities. Can you talk about the customer addition in the unlisted entities for Q1 as well as what is the total customers, and maybe even number of customers which are like above 1 million for us?
Currently, I don't have that data. Maybe I can share with you on email or something. That I will do it.
Sure. Final two questions. First, if I look at the revenue per employee for our company versus the other IT companies, it seems little lower at around 2 million per employee versus some of the companies even do 4 million. So do you expect this number to go up over a period of time, or our business is such kind that maybe 2.5 million is a good number for a business like ours? If you can talk about this thing.
Yeah, from a services business perspective, I think anywhere between 2 to 2.5 million is a reasonably good number, unless you have products and IP and a whole lot of other high margin business that you do. As we start growing in our data and digital capability, the 2 million probably can go up till the 2.5 million. But what we are tracking is a combination of not just revenue per employee, but also profit per employee and also the EBITDA margins as well. So we are in line with what the typical industry actually we are slightly above some of our peers, at least if I were to look at peers who are focused on digital assurance and engineering services.
I think as we are even at a group level tracking even then revenue and even then headcount by capability and region. And I think when you even then see an increase in these digital services that are typically coming with a higher average revenue per day, and even probably the revenue split by between Asia Pacific, Middle East and Europe, I think this is where we are even expecting to increase even then the revenue by capability, and this is even then something that you can even then calculate backwards into the revenue per head.
Sure, sir. On the ER&D side, you have talked about once most of the customers are in Europe only, and once we are able to sell these services directly to other regions, the margins can improve. So has that process started, or by which quarter do you expect that process to start?
So we have started the process, but it will take some time because that's a capability that we need to build in each of the markets, including the sales team's capability as well. But the process has started, but we'll probably start seeing results in 2023 onwards. Sorry, Ralph, you want to add?
Yes, I think even when you look at the listed and unlisted companies, I think we have a significant contribution from the group, or even then especially from the European markets. We see that when we are onboarding and working more in the global delivery, we have a 6 to 9 month sales cycle, and even then a transition period. I think based on what we already have in the portfolio, I think we are definitely working even there on the execution that we have, including sales cycle for new opportunities, and even then transitioning. These are things you will even then see the impact definitely always after a period between 9 and 12 to 13 months. Yeah, but we are, when you look at the portfolio, I think this kind of strategy is, we're not starting from scratch. But there is definitely a strong push and a strong focus from the group perspective, especially from the European countries, on the strategic level.
Sure, sir. Balaji, just final comment. So when we talk about our long-term aspiration of 25 to 30% CAGR, on one side, and then the other side, last year we did 750 crores, and we were talking about 840, 850 crores, which is 19-20% growth. So this gives a kind of dual signal. So either for this year, you think the growth will be lower than our long-term average. If you can talk about the same, because 25-30% on 750 crores is close to 900 crores plus. So are we being conservative, or do we think this year is a little tough, so maybe even 20% is a good growth?
Not really. Actually, what we had talked about even in the last 3-4 conference calls before the merger was announced is that we were expecting the technology services business, which is the listed companies business, to grow at around 25% year on year, and that too it's been growing at that rate only for the last close to around 8 quarters or so. And prior to that, we were actually in single digits. We were in the high growth orbit, and we'll continue to do that. And once the merger happens, as a larger entity, the base also gets larger. So obviously, that's the reason why the number goes down to 18-19%, but which I think is still above the industry average.
Thank you, Mr. Vij. May we request that you return to the question queue for follow-up questions. The next question is from the line of Rajesh from Zenith. Please go ahead. Mr. Rajesh, your line is in talk mode. Please go ahead with your question.
Yeah, good afternoon. This is Rajesh here. I just wanted to understand, like you have mentioned about 10,000 employees. Is it by FY25? I just couldn't get that. Hello?
Sorry, I didn't get you.
You mentioned that we are targeting about 10,000 employees. And this is by which year?
By end of 2025, December 2025.
25. Okay. And what is the attrition rate at the moment?
We are at around 28%.
28%?
Yes.
And that's pretty high, even as per the industry standards. So, are we doing anything to take care of that attrition?
Absolutely, yeah. That's our top priority as well. So it was around 30% last quarter. From that, it has come down to 28%. And most of the industry is, so it's the question of how you calculate it. We calculate everybody who's coming and who is exiting the company, not, each company does it in a different way. But for us, we want to be absolutely clear on where we are losing money, where we are losing our people. And we are, all efforts are on to try and figure out how do we retain our talent.
Okay. And are we also working on artificial intelligence and electric vehicle platform per se in any of the subsidiaries? Do we have that kind of a work, either through development or through testing?
Of course, AI is part of whatever we do, both in the data management practice and also in the digital assurance practice as well. And electronic vehicles is something which we work with most of our customers. Ralph, you want to add anything more?
Then I can probably add a few words on this. We're seeing it on different levels. One is definitely that we are even developing our traditional quality assurance, quality engineering services into more cognitive and predictive and quality engineering approach. And there we even see where and how we can inject machine learning and AI components, especially when we even then see on where and how we can even introduce manual activities as much as possible. In addition to this, as well as you mentioned it, we are doing it even then, especially based even on the new lucid capabilities. So for everything, we are trying to understand data with our customers and even then coming up with this rule-based and even predictive approaches there. And the third is we are having in the central R&D department that we're even having in our headquarters in Paris. We have in there, especially at the IoT side for both avionic and aero, some R&D projects together with our main customers in both of the industry segments, where we are even working in the R&D spaces on some concepts with I think you all know our large customer base and the top customers, the top car manufacturers and aero companies. We are working there jointly on some of the R&D projects. Yeah, so we are covering it both from the more traditional services approach and even really going straight into new technologies.
Thank you. We'll take the next question from the line of Rohit Balakrishnan from iThought PMS. Please go ahead.
Hello, am I audible?
Yeah.
Yes, okay. Hi Balaji, hi Vishwan, hi Mr. Congratulations on a very good quarter. Sir, I just had one clarification, and I think previous caller also asked this. So just wanted to confirm. So I think earlier in the call and even earlier the AGM as well, you mentioned that we'll probably grow at a much faster rate, around 25-30% the next couple of years.
and just by using simple arithmetic, that will make us cross 900 crores on the base of 750 if we take a 20% kind of growth. So I just wanted to sort of get that clarity if that's, am I doing something wrong or am I reading something incorrectly or if I heard something wrong? So just wanted that clarification first. And then I have just one more small question.
No, Rohit, like what I had mentioned this in the past as well. So what we were expecting is that the listed entity, which is in the 400 odd crore range last year, will grow at around 25 odd percent to close to crossing the 500 crore mark. But the unlisted companies, last year they had an unprecedented growth because of one of the large projects that came in. And this year, that was because of that unprecedented growth, obviously it looked like as if there was a growth of around 50-60% only last year. But they'll continue to grow in high double digit. And that's why the combined number is going to be around 850 odd crores. So that's what we mentioned. That's the reason why we talked about the 850 crores number. So, we are obviously looking at seeing whether we will be able to exceed that number. But that's what we are working as our internal guidance at least. It's not a forward-looking statement or a commitment, but that's what we are looking at, and that's the reason why we talked about the 850 crores.
Okay. But I think we're not guiding the market at the moment over a period of several years and with this percentage growth rate. Yeah. I think we see market overall over the larger players growing at 12 to 15%. And I think our guidance is definitely that we are doing better than the benchmark, but not even then with the one-time effect that was explained by Balaji. Okay.
Sure. So just as a follow-up on this, is that, on the engineering services side, given the low offshoring from the parent, and given that is a low-hanging fruit, one would assume that the growth there would be continuously strong, given the low base, and as I said, that we have a very strong overall parent at 700-800 million engineering business, and if they can just increase that offshoring itself, that will keep make our entity here grow. So, is that the right understanding, or is that very simplistic and probably not that right?
I think from an engineering service perspective, definitely an important aspect of the strategy. From a group perspective, definitely the priority on India. But we're even having several other delivery centers, especially in Romania, where we are delivering with a very large team in engineering services, especially for automotive customers and especially the French market. So we also have activities only then to one country, even given the size and even the capability that we have in Romania. India will definitely even now remain the top priority. And this is even where we will even see that we have a strong focus even then on the offshoring or the transitional activities to India, from the especially three large engineering markets in the UK, France, and Germany.
All right. Okay. And last question on Lucid. Can you just maybe share what is what's driving the growth there? Is there some niche area that they're in? Or if you can just maybe spend a bit time on explaining that and how do you see that growing? You mentioned that part of the business should grow very well this year.
So as of now, this is only the first quarter, there is, from a growth perspective, it's been still sequentially in single digits, but the objective is to try and see what the synergies are and how we are able to cross-sell these services to our existing customers. It will help us in growing faster. So I would say that, give us another quarter or so for us to assess what's the kind of potential and then where we will grow. But as of now, from whatever we expected in terms of the numbers that this business has to deliver, they are certainly above that. So from last year, what the business that they did to what they're going to do this year is at least 25% more.
Okay. Thank you very much. for answering all these questions, Balaji, and I wish you all the very best for the upcoming quarters. Thank you.
Yeah, thanks, Rohit.
Thank you. The next question is from the line of Mithun Aswath from KY Advisors. Please go ahead.
Yeah. Hi. Obviously, your listed company is been. I just wanted to understand from that unlisted company viewpoint. Once the merger is through, do you see a lot of opportunity for you to go to market together and get clients directly as well, apart from the outsourcing opportunity from the parent? And do you see that happening maybe in this year, or would that be more in FY24? And would that then help you propel your growth much higher in FY24 than compared to FY23? Because 850 crores on 750 crores is not even 20%. It's 13%. So if you could just highlight that.
Yeah. So the whole synergy of the merger is to try and sell the non-BFSI related segments to other customers in the direct market, which is India, Asia Pacific, and the Middle East. However, as you understand, these are knowledge industries. You need to understand the industry. You need to understand the customers better. For that, you need investment as well. So that's why we're waiting for the integration to happen for us to. We are already planning for it. We have done some steps towards it, but most of the engagement would actually start only in the calendar year 2023, and that is obviously expected to propel the growth higher than what it is.
Okay. Thanks, Balaji.
Thank you so much.
Thank you. The next question is from the line of Manik Taneja from JM Financial. Please go ahead.
Hey, thank you for the wonderful opportunity. Just wanted to put your things around.
Mr. Taneja, the audio is not clear from your line. Please use the handset mode.
Yeah, is this better?
Yes, sir.
Yeah. So thank you for the follow-up opportunity. Just wanted to pick your brains around the fact that the parent entity has considerable business on the R&D side and more so on the auto and the aerospace. If you could help us understand where are we in terms of capabilities in taking up more work for the parent from India in these segments. Thank you.
So the group has been outsourcing this work to India, for many years now. So from a capability perspective, we certainly have the capability, but the requirement is to scale the capability first. And that's what we are looking at in terms of planning on what kind of work will come and how do we scale the particular capability. There are some niche capabilities like what we talked about on the project that we got last year, which is primarily around a niche plastics technology. There are some core avionics technology and products which the group has got in UK and in Germany, but that kind of scale and capability in India. But that would depend on when we will actually be able to, when the particular work can move and when we need to build that capability. But at least 85 or 90% of whatever the group does, we have the capability, but we need to only build the scale.
Sure. Sorry for prodding you on this, but if I have to think about this scale up to about 10,000 people by March 25, how much of
December 25. Sorry, December 25. Sorry.
December 25?
Yeah.
Yeah, sure. So even if you have to probably scale up to from about 4,300 as of March 31, 2022 to about almost like a 2.5 times jump by end of calendar year 25, how much of this growth initially do you think will come in from R&D versus the revenue assurance or the testing piece that is currently bigger than the R&D piece right now?
So right now the business mix is 70-30. 70% of the business is on the technology services space, and we expect that would probably be 60-40 or 65-35 if we were to continue the growth trajectory across both. Expecting that the group's business in the engineering segment will grow scaling. So that's what I had mentioned in the last couple of quarterly investor calls. So that's what our expectation is as we scale. The business mix is likely to be 60/40 or 65/35 in the next 2 to 3 years' time.
Sure. Thank you.
Thank you.
Thank you. The next question is from the line of Shrishti Jain from Monarch Network Capital. Please go ahead.
Thank you for the follow-up opportunity. So I just wanted to understand that, earlier when we were talking about the merger, you expected the engineering business to go faster than the listed entity. And that was, pre-acquisition. So now what has actually, pre-acquisition of Lucid Tech, so what's actually changed? Are we seeing some slowdown? I understand the base effect coming into play. But other than that, has anything changed in the engineering front? Because we still expected that to grow at a faster pace.
It was Balaji probably again, and appreciate all the questions, even at the engineering side. I think we are in the earnings call for Q1. I even understand that you are talking and asking questions for the 3 years, especially even to get a better understanding on the engineering business. So I think we have the activities, we have even this significant growth that was mentioned by Balaji, with some of the initiatives. We generally see today not a slowdown in our engineering activities. We see a shift of the mechanical engineering activities completely away from Europe, especially into Romania from our perspective, and into India. And I think this will definitely continue, even due to a significant cost pressure in the market. In addition to this, the second growth segment for us is all what in aero and automotive around electronic and embedded. And very specialized activities here with a significant on-site integration, and all the customers and the large, especially auto customers, are doing this in a time in Europe full of uncertainties, pandemic picking up, a war in Europe, and even a significant energy. Today, no one knows what will be the impact in winter, when there will definitely be, especially for the large German production side, and probably even part defense production sides, no gas delivery from Russia. So we don't see today a slowdown in activities, but we see that the customers on the one hand side are a little bit cautious on even making the long-term commitments, given the short-term challenges that we see in this part of the world. In addition to this, the significant and biggest growth segment is definitely in electronic and embedded. But even there, we see all over the different customer engagements that we are doing this because our Indian we have to continue to invest in our.
Ralph, this is the operator. The audio is not clear from your line, sir. Please check.
Okay. Yeah, I hope that you can hear me and probably even heard what I.
Yes, and now it is clear. I request you, sir, to repeat the last line.
Yeah. So probably I just mentioned, so we don't see a slowdown in the demand today. There is a shift due to the cost pressure and the mechanical engineering, definitely into offshore. Significant investment embedded in electronics, which require adequate skills in the delivery centers in India. This is still a little bit European left. What is happening there today when it comes to embedded and engineering, and there we even see when we can synchronize even there the skill mix. We even have that good chances to grow. But as I said, customers at the moment, especially aero and automotive, still investing, but even looking very carefully on what is happening, even with the short-term challenges, as I mentioned, especially the energy crisis. This can have a huge impact on supply chain and construction, and even then on the cash that these companies will generate, and even the pandemic that's definitely picking up again in Europe during the winter time.
Sure, sir. And so, we've actually won 2 big contracts. Would you like to, elaborate, throw some light on that, the tenure, the timeline, the kind of services that we'd be providing?
Sorry, Srishti, didn't get the point. What are the big contracts?
We won 2 new contracts in the $1 to $6 million USD segment, right? Is there anything material that we would actually be doing there?
So one of them is actually an existing customer who moved into the 1 million plus category. And, the work that we are doing, like what I mentioned, for this quarter, we also got a couple of traditional quality assurance work as well, some significantly larger numbers for one of the customers who are actually moving into a core banking transformation piece as well. So that's the reason why this is the increase in the 1 to 5 million range. And, our objective is to try and create more customers in the 1 to 5 million, 1 to 2 million range, which will actually become the 2 to 5 million over the next year or so. That's what our expectation.
Thank you, sir. That's it from my end.
Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
Yeah, thank you for the opportunity again. Sir, on the digital revenue front, so we have done quite well over the last couple of quarters. We had an aspiration to take it maybe even at 45-50%. So is there maybe this quarter you got more traditional customers, but is the trend towards that by the end of this year we'll move to 40-45% digital, or if you can talk about this thing?
Yeah, we expect it to be around 40% by end of the year is what we are seeing. And that's the segment which is growing faster than the other segments as well. So, and that's where we see customer demands, not just from our own customers, but also from the group as well.
And the aspiration is still towards maybe in next couple of years to take it to 45-50%?
That's right. So this year we should get closer to the 40% range, and the expectation is to get closer to the 50% range, or 45 to 50% range in the next couple of years.
Sure, sir. And on the Europe front, if I see this quarter was little soft. So was it just one-off, or are we seeing some impact of recession? Because the other geographies, Asia and North America, did quite well. I'm talking about quarter and quarter, but Europe seems to be going down a little bit. So was it one-off this quarter, or even next quarter you are seeing some slowdown in the Europe part?
So it is more from an overall mix actually. So it's a mix change. Even though value-wise it has grown, but because of the mix change, you see that percentage changing. So,
and also value-wise also it has gone down quarter and quarter from 57 CR to almost 56 CR for the quarter. So
Europe,
can't be.
Yeah, I'm not seeing any, because value-wise we don't see that, because we only display the percentage in the presentation, the revenue by region. That's more a percentage mix what we give. And if
But if you calculate the actual numbers, there seems to be slowdown. But you are not seeing any slowdown in Europe. That is the question.
No.
No, as of now, no, we don't see any slowdown.
Sure. That is it from my side. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you so much. Thanks once again for all the interest and the questions. And I hope we were able to answer most of your questions. And hope to see you all in the next investor call. Wish you all a very happy Independence Day and stay safe.
Thank you.